Thank you, Governor, for agreeing to speak with ET now to explain the logic of the monetary policy that you just announced. Though, of course, the interview will go a little beyond the monetary policy. So I do hope you will enlighten our viewers about a lot of the thinking at the top of the Reserve Bank of India. Let me start by asking you that you described in one of the papers, the Economic Times, in fact, today, as an inflation warrior. Is that how you see yourself, as somebody zealously going single-mindedly in pursuit of the inflation demon, as it were?
No, I don't see myself as that, because there's so many other things we're doing. We're trying to increase the pace of reforms in the financial sector. We just announced payment banks, small banks, a whole variety of things we are doing to change the financial sector. So to argue that we're only focused on inflation and there's nothing else we're doing is, I think, a mischaracterization. But we are worried about inflation. I mean, I have repeatedly said that I think inflation is one of the biggest impediments to growth. And it is an impediment because it's standing in the way of savings, it's standing in the way of a stable exchange rate, it's standing in the way of lowering interest rates. Somehow people think that I have a wand, that I'm going to bring interest rates down and I'm the only guy who determines interest rates. No, the state of the economy and inflation determines interest rates. In fact, and I've kept saying this, if I reduce policy rates substantially, the banks are not going to follow suit and reduce rates because inflation is too high. So we need to bring it down. We've had some success, but it's too early to declare game over. I think we need to go much further in establishing a credibility for lower inflation. And I think people who are saying, okay, inflation has come down, time to cut rates, and we've had a bunch of people saying that, simply don't understand this is exactly what we did repeatedly over the last 5-6 years. Anytime we saw inflation coming down, immediately there's a huge amount of pressure to make monetary policy more accommodative, and we didn't take actions on the other side, on the real side, and again inflation started coming up. And so I've said, let's fight this fight once, finish it, and then move on, and then we'll have more stability. We can't be the only country in the world with 10% inflation, only large country apart from Argentina.
So are you setting your sights on 8%, 6%, or even further at 4%?
No. So 8 and 6 was set keeping in mind the fact that given the condition of the economy, this was something that was achievable without a tremendous reduction in growth. So that it's also time. If we do it steadily over 2 years, there's enough time to do it without substantially affecting growth. So at this point, this is all we have in mind. Let's get it down to 6. That's a reasonable level of inflation. That's much more reasonable than the 11.2 that we had last November. So we need to get it down to 6. Then, you know, we can have a public debate. The government is going to weigh in on that, what the ultimate inflation goal might be. It could stay where it is. It could go down. The Urjit Patel Committee says a band, between 4 and 6. I mean, that is a debate one can have later on. But let's get some success now in getting it down to where we have to go. And we think this can be done without a substantial sacrifice in growth.
I think the question is not so much about the 6% per se, but how quickly do you want to get there? If you want to stick to your original deadline of January 2016, then what will it entail in terms of getting there? I think the anxiety is on that score. So is there a case for kind of rethinking that 6%, or is it sacrosanct both in terms of the number and in terms of the date?
See, we had a bunch of very smart people, the best monetary people in India, on the Urjit Patel Committee, and we had some outside observers also. They thought that 8 and 6 was feasible. We are now seeing that 8 is definitely feasible, which wasn't necessarily true when we started. So given that 8 is feasible, I think it's premature to say that 6 is not, let's abandon it, let's think about something else. We are quite determined that 6 at the end of the year. So you're right that the time and the number are what we are trying to achieve. Of course, if some big shock buffets us off the path, we will have to recalibrate if necessary. But with normal shocks, we think 6 should be achievable.
But a lot of the RBI success, quote unquote, on the monetary policy and inflation front is dependent on what kind of buy-in you get from the government.
Absolutely.
And though you did mention that the government has committed to fiscal consolidation, I mean, are you really convinced about the government's ability, willingness, and to undertake the measures that are necessary to achieve that 4.1%. Because in the Indian context, monetary policy has always played second fiddle to fiscal policy.
Well, I think, I also think that monetary policy shouldn't use government actions as a crutch to abandon its responsibility. I've said repeatedly that the government has to do what it has to do, and we have to do what we have to do. If, the government has said we are committed both on the fiscal front, but also on the food management front. And remember, food management is a very big part of inflation in India. And I think the initial steps they have taken, including sticking to the 4.1, it would have been easy for the government to say, 4.1 was previous government, we can't do that, we have to recalibrate targets and so on. They didn't. So given that, I think we should give the government the benefit of doubt on the fiscal front, that they will do what it takes to achieve it, and there are plans to improve the quality of fiscal consolidation. For example, bringing in the GST, increasing the revenue base without raising marginal taxes. Those, I think, are important elements. The Expenditure Reform Commission that the government has suggested on rethinking the subsidies is important. If conditions continue as they are, a very big if, diesel subsidies can be dispensed with going forward. So, number of things which say that yes, we should give the government room to do what it needs to do. Food management, some steps have been taken, more need to be taken. Let's see how they play out. But I think government does what it does, we have to do what we have to do, and we have to work together.
Two questions. A, have you done any independent, back of the envelope calculation of whether the government's numbers are possible at all? Are they authentic? How much credibility there is? Because the market doesn't buy. So have you in the RBI reworked those numbers to see whether they are credible and whether you can go by that, number one? And number two, if the government, for whatever reason, is not able to abide by the numbers, in terms of not on paper, but in terms of real, genuine numbers, then will the RBI have to overcorrect as it has in the past very often?
Well, I think the government has said that, it is going to achieve the target. Now, the question you're really asking me is, will the target be achieved through normal processes, or will there have to be a substantial correction later on, as was done in the last 2 years, through cutting back expenditures, etc. And there was genuine cutting back of expenditures.
Not just cutting back, also in terms of deferring expenditure, and not really, the numbers are not really, what shall I say, the integrity of the numbers is very questionable.
The government has said that it believes in financial integrity and so on. And there is some natural spreading of spending that happened this year into next year. That happens naturally. The issue is it should not become excessive. We shouldn't take advance tax payments only to refund it immediately after the deadline has passed, so as to indicate a better government fiscal position. So the government has said that that is not what it believes in, and is going to maintain clean accounting, and I think we should, as I said, give them the benefit of doubt. If you do the numbers, of course, the issue is how strong growth is, because growth defines the revenues that come into government coffers through corporate profits, through excise, and so on. And we have to wait and see. We think the prospects of growth have improved in the last few months. From the industrial side, on the agriculture side, they have become more uncertain because of the initial deficiency in the monsoon, which has been made up. So that's the good news on the monsoon front. We have to see how this all plays out. Our sense is 5.5 is feasible. Whether it goes beyond that. If it goes beyond that, the government gets some headroom on the fiscal front. But it is an ambitious target. 4.1 is an ambitious target. Again, let me repeat, the government will achieve it if it does what the government has done before, but how it achieves it is what is important. Because
a lot of what you mentioned in terms of government's measures, those are all GST, etc., will play out over a period of time. Whereas 4.1 is what you have to achieve within this fiscal, of which we've already finished more than a quarter.
That's right.
In fact, the first quarter, the fiscal deficit is already 56% of your budget estimate. So is it realistic at all to expect the government and hold them down to it and plan monetary policy, formulate monetary policy on those lines? Well, or do you have a plan B?
Oh, no. You have to be careful that fiscal deficit number is not uniform through the year.
It's not one
quarter.
More than last year's.
Yeah, but to some extent, paying the things that come due at that point, etc. The spending is not a uniform straight line over the years. So be careful about pushing that 50% number. Remember, last year, towards the end, we said it had already exceeded 100% of the number, but then it came down after that because some revenues came in. No, it is an ambitious target. I'm not denying that the government's 4.1 is an ambitious target, but they have said they will achieve it. There are a number of things underway. You're absolutely right. Some of these measures are longer term, but also remember that we have to worry about the longer term fiscal consolidation. There, I'm fairly confident that India has the capacity to bring its fiscal under control, because we actually don't spend too much as a fraction of GDP relative to other countries.
Sure.
Where we do a less good job is in collecting revenues. So broad basing the revenue collection process, making everybody pay their fair share, broad basing the collection of indirect taxes. I think expanding the base is the way we're going to do it, and these new measures, improving tax administration, GST, all those will help tremendously, and I have no doubt that if we do all that, our revenues, our tax position should be far better. Last point I'll make, we don't calculate a cyclically adjusted fiscal deficit. Remember, the fiscal deficit we're talking about right now is at a down phase in the cycle. I think most people would agree that our current growth rate is probably as bad as it ought to get. We have to be better than this. So to the extent that our growth improves, our fiscal deficit, having achieved this in really bad times, we should find it easier to achieve further consolidation because our revenues will improve.
But the only problem with the concept of fiscally adjusted, cyclically adjusted fiscal deficit, business cycle adjusted, is that it's very difficult really to define where the circle begins and where the circle ends, because we are still arguing about when the Great Depression, whether it was 1929 or 1930. And with governments like Indian governments, with apologies, is that it's very difficult for them to, it's very difficult for a central bank to prevent the definition of that cycle being defined in political terms. And so if you don't have an FRBM, which is much more tight than we've had in the past, it becomes very difficult for a central bank really to pin the government down, particularly because the Reserve Bank of India is also the merchant banker to the government. Yes. So you've intervened and allowed devolution of auctions at a time when maybe you should make the government pay the price for its fiscal imprudence.
No, so there were other factors because of these new bonds, old bonds, etc. in the recent devolution. So I don't think you should read too much into that as, the Reserve Bank is now turning a new chapter in government finances. No, I think we should just leave it as a technical issue. I think I was not suggesting that FRBM targets be set on a fiscally adjusted basis, on a cyclically adjusted basis, because there are problems in measuring the cycle. I agree with that. What I was saying is, don't be too pessimistic about the fiscal deficit today, because we are at a low point of the cycle, and to that extent, as the cycle improves, as growth picks up, we should see some natural consolidation that happens. We keep talking about 2007 as a point when our fiscal deficit came down substantially. A fair amount of that was also on the basis of very strong revenues, because the cycle was strong. So we should keep that in mind. And the flip side also applies. When the fiscal deficit narrows because of those revenue improvements, we shouldn't turn around and spend it all.
Absolutely, which is what we did in the past. But that means you're not as cynical as journalists are and observers are about government's fiscal management plans, and you don't have a plan B as things stand. You're willing to go along with the government's numbers.
We always have plan Bs. We don't reveal
you
plan
don't reveal them, okay. But I do hope you have something up your sleeve. But to come to the question, Governor, of the RBI having to straddle two horses, growth and inflation, as it were, price stability. Between these two broad objectives, apart of course from financial stability and things like that, on which of these do you think you have a longer way to go? Is it growth that worries you more, or is it inflation that worries you more?
I usually would say, look, lower inflation is the way to grow, but I'm cognizant of the fact that the economy is weak. I think the latest signs suggests that growth is picking up. Not so much reflected in corporate profitability, but you see, early signs in the industry side. Electricity generation has been quite strong. If the monsoon is not too bad and agriculture plays a little bit of a part, not as big a part as it did last year, but a little bit of a part, I think 5.5 for this year should be achievable, but the path, the trend will be towards stronger growth. I have said repeatedly, I'll say it again, the cost of money is not the biggest impediment to growth now. It is a combination of subdued investment and to some extent subdued sentiment pre-election. Now, as the post-election stronger sentiment starts kicking in, one might hope, and early signs are in the automobile sector, there is some pickup. One might hope that that pickup becomes more broad-based, and so I'm a little more hopeful about growth. Now, inflation numbers have been quite good in the last couple of months.
Partly statistical, but
some of it is base effects, which is just plainly statistical. But vegetable prices picked up. Some of it is a seasonal pickup. Some of it is more than seasonal. We have to wait and watch and see as we go into August, September, October. Our sense is because of the statistical effects, inflation year on year will come down as we go to November and then start picking up. The key is how much it picks up after that. And if in fact all these forces of disinflation start playing in, hopefully the economy will be in a reasonably good position on the inflation front also. But right now I think we are probably, if you wanted to, 60-40 growth versus inflation.
Okay. Now, this government, you spoke about political stability and how the government is doing its bit on the supply side. It's been in office for about 2 months. How would you like to categorize your relationship with the government? Is it better with this government, relatively speaking? Can I pin you down? In
no,
what
you can't
way?
pin me down. I think the RBI enjoys a good relationship with the government, had a good relationship with the past government also, and we communicate on a daily basis. And it's, multiple channels. It's with the bureaucracy, which hasn't changed much. Certainly at the ministry level since the last government, but even the personalities who change. I mean, the dialogue is an ongoing dialogue. I don't think. I mean, we're a technical organization. We do what we need to do, and we try and explain and work with the government of the day.
Absolutely, but except that the advice must not fall on deaf ears, because you mentioned the fact that the government and the RBI are on the same page. That is not a statement that you made earlier. Of course, there's nothing which says that just because you didn't make it earlier, you didn't have a better or worse rapport or better rapport now. But is there anything in this particular setup which makes you feel that there is greater buy-in from the government on inflation control?
I would not term it as greater buy-in. I would say we enjoyed a healthy relationship with the last government. We enjoy a healthy relationship with the current government, and I won't put it as greater, lesser, or whatever.
Is there a greater concern about inflation? Let me put it that way.
I think there has been, across the political spectrum, concern about inflation. In fact, today, I think in your paper wrote about the MPs seeing the price of food in the canteen, suddenly recognizing that it had been subsidized for a long time and they didn't see the full price. Inflation is a concern across the board, and every government worries about bringing inflation down. The key issue that is often discussed is what is the relative impact of government measures versus interest rates. I think over time, as we see core inflation coming down, we have to recognize the impact of both government actions in narrowing the deficit as well as RBI actions in having an interest rate that is reasonable.